What is going on, everyone? How you guys doing? My name is David. I'll be your one and only co-host for today. Thank God, no Robin to babble my ear off. If you are new here, welcome. This is not our regular streaming time, but we are streaming on Monday nights now between 6:30 and 6:45 p.m. Pacific and 9:30, 9:45 p.m. Eastern Standard Time. So if you're new here, say hello. Would love to welcome you personally. Also, guys, if you're in the chat, make sure to hit the like button to tell me that you like me and like the stream, except for Crypto JMP, who thinks I still need a warm glass of milk next to my bed. Crypto JMP, if you're in here, I still love you, my friend. All right, guys. So today, our focus of the stream is going to be CPI, what to anticipate, what people are saying. The basket of goods is changing. We're going to get the number tomorrow. What are the big wigs expecting? What should we expect? And what did price do last time CPI numbers came in? But first, I want to say what's up to my people in the chat. So the first person in here was, I believe it was Brokey Oshi. Crypto Billy, Crypto 420. So right off the rip, three of our whale members, also Jessica, Destroyer, who literally looks like a destroyer. Web3 Me said, hey, low, my dude. And then my boy, Wheeling Dylan James Wheeler. And Cindy La Uruguacha. You see, you come to the night stream so you can actually hear your name pronounced correctly. So if you like your name pronounced correctly, put a 1 in the chat. All right, guys, let's get started. So, I always like to start our streams off with some giggles, right? We got to have some fun. And so tomorrow is Valentine's. What do you guys, let me know in the chat, what do you guys have planned for Valentine's? If you have a lady or a boyfriend or a husband or wife or a spouse or whatever, what do you plan on doing? And if you don't have a spouse or a boyfriend or girlfriend or whatever, let me know if this is something that you would do. And so, yeah, here you go. Gotta, flex for the gram here. Man, I'm sure we all know someone that is going to be doing this tomorrow on Valentine's Day. If it's you, no shame. It's okay. It's going to be okay. All right. Let's jump right into it. So the first thing I want to talk about is tomorrow's CPI and what the big wigs, the big companies, what they are expecting. And so this is a tweet from @GerGavin. CPI estimates for tomorrow. So Ameriprise is the lowest, coming in at 5.8, followed by Bank of America and Scotiabank at 6.1. We have a bunch of 6.2, including JP Morgan Chase, Wells Fargo, TD Securities, and Barclays. Visa, BMO are over 6.3, Goldman Sachs 6.4, and then SMBC Nikko, which I have zero clue what that is. They're coming in at a hot 6.7. And the median estimate, guys, is 6.2. That is up from that is down from 6.5% last month, year over year. So from December 2021 to December 2022, the headline CPI inflation came in at 6.5. Will we come in at 6.2? And what will the markets look like? Well, here's a tweet, which is kind of interesting. This is from Aisha Tariq on Twitter. So this is JP Morgan Chase's game plan on CPI day. Let me drop my camera here so you guys can see. So they're saying if we come in at above 6.5, which they put a 5% probability, expect the S&P to go down between 2.5% to 3%. If we come in above forecast between 6.4 and 6.5, which they put a 25% probability, they expect the S&P to go down between 3/4% to 1.5%, right? The majority, though, right, the biggest probability is between 6 and 6.3%, and they expect the S&P to react to the upside 1.5 to 2%. And if somehow we beat forecasts, which there's a 5% chance of that, according to JP Morgan Chase, expect the markets to move up 2.5 to 3%. So we know a 2.5 to 3% move in the traditional markets usually translates to about an 8 to 12% move in Bitcoin and crypto. And we'll get into the charts a little bit later, but there is one company that has seemed to hit the nail on the head on forecast versus actual inflation, and that is Trueflation. They are expecting the headline to come in under 6%. So 5.8%, which is significantly lower than the consensus, which again is 6.2. And here is a picture I'm going to show you guys. So in October, their forecast was 7.7, it came in at 7.7. In November, their forecast was 7.4, it came in at 7.1. In December, their forecast was 6.5, it came in at 6.5. And in January, for tomorrow's CPI print, they are expecting and forecasting 5.8%. What will the actual be? And according to JP Morgan Chase, if we do get below 6, expect markets to move up 2.5 to 3%. Of course, this is just one company's opinion. What do you guys think? I'm curious. What do you guys think? Do you guys think we're going to see sub 6%? And we do have the a poll in the stream, so make sure you vote on that. So it looks like right now, I'm not going to close yet. It looks like right now, 65% of you think we're coming over 6%. I think we're actually going to be coming in under 6%, and I'll kind of tell you why. And guys, remember again, basket of goods changes. It went from every 2 years to now every year starting tomorrow. So although we don't know what those baskets of goods are going to be and what the weight is, we do know. Let me find it right here. Here we go. Let's swap over to this. We do know that there's going to be more of an emphasis on housing. So this is from thehill.com. CPI calculation to be revised for January price data. The new calculation will put more importance on the housing sector and less on used cars, and will include some methodological changes that could push the headline number higher than economists had been expecting after a year of rapid price changes. A segment of the CPI called owner's equivalent rent will now account for more than a quarter of the total calculations, while housing overall will account for more than 44%. Used car prices have been lowered in importance after a year in which wholesale and retail used car prices fell out of sync with each other. Weights are going to be updated annually now in the Labor Department's calculations as opposed to every 2 years. And economists are expecting CPI to go up by 0.5% from December to January, which means that we would go from 6.5 year over year to 6.2 year over year. I didn't get a chance to look into what economists think the core is going to come in at. Now, the core is the headline minus the most volatile, which is housing and energy. And so if the core comes in lower, and just to kind of show you guys here, or just to kind of take a look, so the core last month came in at 5.7. So we had a 5.7 on the core. Headline again was 6.5. So if core comes in the low fives, that's looking good. And so you might be asking, well, why are the markets rallying, right? Well, here's part of the reason why the markets are rallying. So this is, let me just show the tweet here, give him credit. This is from the Kobasi letter at Kobasi letter on Twitter. So market futures are now pricing in 3 rate hikes and 2 rate cuts, excuse me, in 2023. So you can see here in blue is what the major consensus is. So right now we're between 450 to 475. So in the next one, the 22nd of March, 90% of them are expecting them to raise 25 basis points. The following meeting in May, they're expecting another 25 basis point rate hike. In June, 44.6% of them are expecting it to stay the same. So halting rate hikes, while 42% believe another quarter point is coming. And then in July, they're expecting that other quarter point to get us to that 525 to 550. And then they believe that in the back half of the year, in Q3 and Q4, they're expecting the first rate cut in September. 40% of them expect 25 basis point cut. The following month, 40% of them expect it to stay there. And then finally, in December, the very last meeting of 2023, markets are expecting the Fed to cut another 25 basis points. So I am curious, what do you guys think? Do you guys think that the Fed is going to cut? So I feel like we can all agree that at the very least, at some point this year, the Fed is going to halt, right? Jerome Powell came out in his speech after the FOMC meeting in his press conference, and he did a speech at the economic something in, I believe it was in Washington, D.C. just a week ago. And he said, disinflation has started. So markets reacted positively to that, right? Disinflation. So money or prices are starting to go down. And so what you guys got to understand is, and I talk about this all the time, when you look at charts and numbers, just understand behind those candles, behind the charts, there's people, and people make decisions off of emotions. So if I'm sitting there and I'm just, and it's confirmation bias as well, right? If you're sitting there and you're one of the people that are like, yeah, they're gonna halt, they're gonna halt, they're gonna halt, they're gonna halt, there's no way speaking, and then bam, Jerome Powell says, he doesn't even say we're gonna pause. He just says, disinflation has started. Oh my God, everything's gonna be fine. They're gonna start cutting rates again, blah, 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 blah. You start pumping the markets up, everything, people start rallying in, people hedge or people FOMO into the stock market and the crypto markets. And then Jerome Powell has to come out and say, well, no, guys, blah, 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 blah. And so it's a loop, right? It's a confirmation bias loop. And so that is why it's so important what Jerome Powell says after the FOMC meeting. So just a little something to think about there, okay? All right, so let's talk about what weight is changing, okay? Or what I mentioned. This is from the Bureau of Labor Statistics from the actual government website. Every year on February 14th, there's a celebration of love. This February, the Bureau of Labor Statistics will celebrate an improvement in the CPI, which we hope you will love. Beginning with the January index scheduled for publication on the 14th of February, BLS plans to update the spending weights in the calculation of the CPI every year instead of every 2 years. Spending weights indicate what share of total expenditures each item represents. This change will improve the relevance of CPI spending weights by using the most recent consumer spending information. Now, here's what I want you guys to kind of think about, right? So what does this mean? So every year, or it used to be every 2 years, moving forward, it's going to be every year, you have a basket of goods, right? And so they look at the consumer spending patterns, right? In 2021, what were people spending money on? In 2022, what were people spending the most money on, right? And then they take those basket of goods and they move them into 2023 and how they calculate their CPI. The problem with that is this, is if the price of, if people are buying seafood, let's just say, right? Lobster, shrimp, scallops, crab, whatever, in 2021, in 2022, or in 2021. 2022 comes around and there's a shortage or China's locked down and that thing skyrockets 40, 50%. So people stop buying those items. Well, guess what? Now those items are not going to be in the basket of goods for the following year. And so ask yourself this question, is that really measuring what inflation is? Did the prices of that seafood come down, or we're just not looking at it anymore? We're not looking at it anymore. And people are in a bind, prices are high. So instead of buying seafood, you buy pasta, you buy ramen, you buy dried goods, you buy canned goods, which are cheaper. And so those items are now going to be in the new basket of goods. And those prices don't really change. They don't have as big of swings when it comes to prices as something like poultry or meat or seafood, right? And so I think it's an unfair way to truly measure inflation and what that means. And so I'm not a fan of that. I'm curious to know what you guys think. And I'm gonna ask you guys for a favor. You guys, the guys that have been watching me, you guys know I'm not a rambler. I don't like to ramble. So Rob is not here to back me up on the rambling. So I need you guys to help. I need you in the chat. Be active. Ask questions. I'm gonna flip from this to the chat. I'll do some Q&A at the end as well. All right, let's end this poll. and see. So 59 or 58% of you think CPI is coming in at over 6%. Yeah, Jessica said men stop buying underwear again. I never buy underwear. My wife buys my underwear. Don't judge me. All right, let's take a look at. All right, so we talked about housing, right? So they said, let me share my laptop. So they said housing, right? Owner's equivalent rent and housing is going to count for more than 44% of the CPI number next year or starting this year. And so let's take a look at some numbers when it comes to housing and rent. So this is from tradingeconomics.com. This is the United States rent inflation. And you can see from January of last year, this is a 1 year chart. January of last year, we've seen a steady increase with no slowing down in sight. So, what is the January? So, this is October, November, December. What's the January number going to come, right? And I have an even more in depth one. This is from rent.com. So, you have in the red, you have change month over month. In the yellow, you have change year over year. And then you have the histogram of the median rent, okay? So, obviously, guys, things were pretty steady back in 2019 before the pandemic. And then it spiked a little bit during the pandemic, cooled off, and then just absolutely skyrocketed. A lot of people believe it had to do with because of the moratorium on rent. Uh, People weren't allowed to get evicted and people were not paying the rent. And so these landlords they said, well, if you ain't going to pay us now, moving forward, when the moratorium is lifted and we can actually kick you out, evict you, they jacked up the prices. And so here's something interesting, okay? So some interesting I drew, and I'm going to drop my face here so you guys can see the entire thing. So this is from the Fed, right? The federal Fed of, I believe, St. Louis Fed. So this is vacant housing units in the United States. So this goes back all the way to 2000 and it goes by quarters. And I want to draw a comparison. Now, this is a little lagging, right? But I want to take a look here, okay? So this was back Q3 of 2020. We got lowest we've been since the early 2000s, right? So only 13.8 million vacancies, right? Units vacant. So Q2 2020. Let's take a look here. Let's take a look at Q3 and Q4 of 2020. Q3 and Q4. So here we have Q3, right? October, July, October, or July, August, June, July, August. Okay, that's Q3. June, July, August. You saw this increase, then it cooled off, and then bam, let's go back here. Let's take a look at when vacancies went up, right? So the comparison I'm trying to draw here is supply versus demand. When there's a lot more vacancies, right? Like here, a lot of vacancies, right? When there's an uptick in vacancies, think about it. Demand is falling because you have more options. So what do people do to get people in their homes? These landlords, they lower rent prices. The opposite, when vacancies go down, now they can sit there and say, well, I think my house is actually worth a little more money. And so what we're seeing now in Q4 of last year, we are seeing vacancies drop. Okay, we're seeing vacancies drop, and since we topped out on this median monthly rent back in October of last year, median rent was $2,053. $2,053. That's a lot of money, man. If you make 50 grand a year, just to put it in perspective, if you make 50 grand a year, half of your money is going to your rent, somewhere to live. That doesn't include utilities. That doesn't include gas. That doesn't include groceries. Now, luckily, it's come down, but it's kind of been teetering over the last 3 months. Since October of last year, you saw October came in 1983, which is up 7.8% year over year, followed by an uptick to over 2000 again back in November, and it came back down in December. Still $1,979. And if you go back to this one, and I'll drop my face again. Actually, I'll just scroll up. If you take a look at this one, vacancies are dropping again. And of course, we don't have the Q1 numbers, right? We got to wait for the for end of March, beginning of April. We don't have the Q1 numbers, but this has been on a downtrend since Q3 of last year. So vacancies are going down, which means more people are in homes. So what can we expect? And of course, we're forecasting here. This is not saying that these numbers are going to come in hot. I'm forecasting. I'm just looking at data, historical data, and what can we expect moving forward. And so, guys, if you guys think we're out of this housing thing, I think we're far from it. So that's interesting. Let me know what you guys think about that, about these numbers, and does this worry you? Do you guys think that this has any correlation? I'm curious to know what you guys think. And speaking of what you guys think, I'm just gonna hop into the I'm gonna hop into the chat real quick. Uh, I'm making it feel like a Zoom call. Fair enough. I will work on my audio when I'm done, guys. I promise. My apologies. My audio engineer is not here with me. So, uh, Charlie Mack said, Fed gonna fake it till they make it. A lot of people are saying that Jerome Powell doesn't have the cojones to follow through on everything he's saying, to wait till it comes down to 2% and stabilizes at 2%. And they think he's going to reverse course. I don't know. Who else here watching Gilmore Girls right now? HD earphone. Yes, Crypto Billy says, smash the like button for David. Yes, please. Smash the like button. And Magic Internet Money, which, guys, Magic will be on our show tomorrow. So super excited to have him. We're having Crypto Blood on tomorrow as well, but we're bringing Magic in right off the rip. As soon as we go live, Magic is joining us. CPI numbers come in at 8:30 a.m. Pacific. Obviously we're expecting volatility. We're gonna take a look with Magic at the charts. What's moving. What are some levels to look at? R252 said, "Are you implying that they manipulate the numbers?" Shocked face. Yes, yes. I'm shocked. All right, let's move on to median sales price of existing homes. So that's actually been on the downtrend since June of last year, where it peaked out at over $413,000. Guys, I bought my home in June of 2020. Okay, June of 2020 is when I bought my house. I bought it for $360,000. My house in June of this year, or of last year, 2 years later, my house, I was getting offers for over $530,000. And so imagine the people, interest rates are low, right? There was a shortage of supplies, right? So home building wasn't happening as fast, right? So you have demand was outpacing supply, pumped up the prices of the homes. People refinanced at these lower rates. They pulled their money out. And I think that had a lot to do as well with how the markets were reacting as well, right? You had all these baby boomers were retiring, and a lot of people are saying, "Hey, it wasn't just hey, it's retirement age." It was like, "Damn, my house went from 300 grand to 500 grand, and I only owe 50 grand because I've been paying on it for 25 years. Let me pull out close to $500,000 or sell my house, whatever the case may be." And so that's what people are saying had a lot to do with it as well. But median sales price of existing homes is going down. And then I have the median listing price per square feet in the US. So this is interesting. So for every square foot, this is the price they're charging. And so back in 2020, it was around 150, and it's been close to this 120 to 130 range. And then everything started going up along with the housing boom. And we're currently sitting at about $213 per square foot for a home. All right, let's move on to some more inflation numbers. So what I personally hear, what I hear a lot from JP, which JP Jerome Powell, is services, right? Services inflation. Neil Kashkari, the president of the Minneapolis Fed, has said in multiple interviews that the reason they expected inflation to be transitory was because during the lockdown, services were closed. So going to restaurants, going to nightclubs, traveling, services, people couldn't do that. And so that money shifted to goods, buying on Amazon, Walmart, Target, buying cars, whatever the case may be. So what they expected was, as people were coming out of the pandemic, they were expecting demand to shift from goods to services and balance it out and let the supply chain catch up on the goods side. That didn't happen. People kept buying goods. They kept buying cars. They kept buying homes. They kept buying TVs and couches. And services, yeah, services went up as well, but there was no quell in the goods sector. And so I have the services inflation pulled up here. And again, we've been on a steady uptrend since January of last year. We did we thought we topped out here back in September of 2022 at 7.36. That kind of topped out. We were flat for 2 months, and then we're back up. We made a new yearly high. So we're at 7.5. And so, guys, it's not just, oh, CPI is down. The Fed doesn't just look at CPI, right? At the headline. They look at core. They look at PCE. They look at PPI. They look at services inflation, core services, X housing. So these are things to look at. So I'm in the camp that we are not going to see rate cuts at all this year, at all. I also don't think we're going to go over 5.25% on the interest. All right, checking in with my friends in the chat here. Crypto Billy said, my son is a medical doctor in San Fran and he lives in a 1,000 square foot apartment and they can still barely make it. 3,500 a month in rent is crazy. I 100% agree. John West said, I build roofs. It's never been better. Fair enough. Crypto Billy, we are discounting homes now. Interesting. All right. All right. So let's take a look at what the crypto markets are doing. And then we'll get into some charts and then we'll get into some questions and answers, aka Q&A. All right. So I got cryptorank.io pulled up. I'm going to drop my face here. I'm also going to take a quick swig of water because my mouth is dry because I've been talking too long. All right. Bitcoin. Let me refresh it. Dun, dun, dun. Bitcoin. $21,755. Down flat over the last 24 hours. Volatility has come down. Now, remember, guys, this volatility was over 14% last week prior to the Fed meeting. And that has simmered a little bit down to 5.7%. Ether of over 15%, or sorry, over $1,500. BNB took a beating after the news of BUS Paxos halting BUSD minting. They are still doing redemptions. They're just not minting them anymore, and they essentially cut off their relationship with Binance. XRP coming in at 36 cents now. Something with USDC here, and so Ben from BitBoy has talked about this, and people are saying USDC is next, USDT is next. What BitBoy Ben is saying is they're paving the way for USDC. And which, if you think about it, it kind of makes sense, right? You have BlackRock, right? And you hear the word BlackRock, but let me tell you how important BlackRock is, guys. During 2008, in the big financial crash, in the housing crash, guess who the government called on to help bail some of these companies out? It was BlackRock. It was BlackRock. After 2008, BlackRock close to 5x their assets under management. They were right around 1.5 to 2 trillion, and they got to over $12 trillion in a matter of 10 years after they helped bail companies out during the 2008 crisis. And that was, they were called upon by the government. And so, assuming we already know how rigged politicians are, you line their pockets and they'll help you. We showed a video on our live show this morning about Elizabeth Warren sending questions and potential answers to Gary Gensler before his Senate hearing. So we know collusion happened. We know corruption is present in our government, especially here in the U.S. I don't know about governments outside of the U.S. Sure there is. But here in the U.S., right? Money runs these politicians, right? And so you got to assume that they're not going to blacklist a BlackRock-backed stablecoin or even company. And so it's curious. Paxos, I believe it was their CEO or their CFO, said they're going to fight back. They're going to fight this whole thing. And the whole narrative that BUSD was a security, that is just like beyond me. That is beyond me. I mean, guys, the 4 prongs of the Howey test, one of them is expectation to make money. Who invests in a stable coin and expects to make money? Right? And someone brought up the thing, well, they're providing APY. Paxos is not providing APY for people. Neither is Circle. Neither is Tether. It's the third parties, the intermediaries, the centralized entities that are enticing people to give them their stable coins and give them a yield in return. So I'm curious. I hope they follow through, take him to court, and put Gary Gensler in his place. All right, take a look at what the rest of the markets are doing. XRP 36 cents, down 1.19%. ADA at 35 cents. This thing did get up to 40 cents. Tons there. Cardano's, and actually, now that I think about it, let's bring up TVL on Cardano. So Cardano's TVL has seen a nice uptick, and this is compliments of Jed. I believe it was close to 30 million in ADA, 30 million ADA. And so we take a look here. Cardano was outside the top 30 not too long ago. Now they're number 24. So their TVL. So if we just sort this by 1 month change, and we take the crazy 2100% out of it, right? You take a look at, well, what's normal for it. And Cardano is right there for a 40%. Hedera, 43% up as far as total value locked. So ADA finally crossed the $100 million mark. And, our friend Forrest from Sistine Research, he talks about this all the time. One of his things, his gripe, I don't want to say gripe, but and I don't want to say issues either, but one of the things he always brings up with Cardano is he thinks the price is overinflated because there's like it's like no value lock. There's no DeFi. Yes, NFTs are starting, but why is it valued so high? Why is it the number 7, 8, 9th cryptocurrency in the space? They don't have a robust DeFi. Their NFTs, up until 3-4 months ago, they were really doing nothing. And so now, though, with the JED stablecoin, we're seeing the Cardano TVL come to life, up 40% over the last 1 month at $100 million. So, guys, if you're bullish on Cardano, put a 1 in the bullish. All right, let's take a look at some Bitcoin long and sell orders. And so this is updating every 15 minutes. And so, usually these are down the middle, but I take interest in these like Deribit, BitGet, where people trade on leverage. I know you can also trade on leverage on Binance as well, but on Bitfinex, 80% of the trades are on the short side. Deribit, 70%, 56% on BitGet. If we go to the last, or if we go to the per hour, it's much more even, but still looks like it's favoring the shorts just a tiny bit for the most part. And then I talked about what JP Morgan Chase thinks is going to happen. Well, this is what's actually happened. And I'll go ahead and drop my face here. So this is going back a year. So January of last year, forecast actual and how the S&P, the SPX reacted, right? Forecast actual up 0.25%, right? You don't really see big swings. The biggest swing we had was November of last year, where we beat forecast by 0.2% and the markets rallied 5.5%. So if through inflation, okay, so if these guys are on the money like they were 2 out of the last 3 times and we come in at 5.8, what is this going to look like, right? What is it going to look like? You have this, you have people thinking that rate cuts are coming, through rate cuts towards the end of this year. What will the markets do? How the market's going to rally? So pretty interesting. All right, let's take a look at some charts here. And then after charts, we'll do some Q&A. I'm going to take a quick drink of water here. So first thing I wanted to look at is, I want to take a look at BTC on the hour back on the 12th of January, right here, bam. And so just to kind of take a look at, all right, how did the markets react? Water's so good. How did the markets react last time the CPI numbers came? So Bitcoin, 1 hour. So this is in my time zone, which is Pacific Standard Time. January 12th, 9 a.m. Numbers came out 8:30. So we saw a little bit of a rally from 7 in the morning Pacific in anticipation of the release. So you got to assume numbers were leaked, people got wind, blah, blah, blah. So this thing from 7 in the morning on CPI day up until let's just call it the end of the day, Bitcoin went up 6%. It went up 6%, it consolidated, and then it continued to go up. Where are we at now? And I'm just going to take a look at some levels to the upside and to the downside. So I'm going to swap over to the 4 hour on Bitcoin. And what I like to do when we look at levels, I like to throw on my Ichimoku. Okay. So right now we're in a bearish trend on Bitcoin, according to Ichimoku. What are some levels if we rally? Okay, if CPI numbers come in, let's say true inflation is correct, CPI numbers come in and they're under 6%. I would expect a rally up to about $22,350. That is where the cloud begins. Okay, and so typically, if you take a look at previous price action, well, we come and make our way towards the cloud. I'm going to make this, don't worry, guys, I'm going to make it a little more legible for you guys. You can see here, here's one example, right? We come towards the cloud, we break through the cloud, then get rejected, right? Come below, break through the cloud, make support on top of the cloud. If you go back here, right, we rallied from, let's just call it from right here, rallied from 16.3, pierced the cloud briefly at 16.8, got rejected, traded sideways, and got rejected again at the cloud. So the cloud is extremely important, and it's pretty accurate as far as when you want to take a look at trend, support, and resistance, right? So the trend is currently down, right? Lagging indicator is below the price, which is negative. You have the conversion, or you have the baseline over the conversion line, which is also negative, but it does look like these are looking across, which would be the first positive sign on this Ichimoku. So Bitcoin comes in. Numbers are looking good. What do we expect? I expect us to meet immediate resistance at $22,300, which is about a $500 spread from where we are now. Now, I'm not saying we can't blow right by it, which we can. Let's say the numbers come in at 5.8%. Housing is going down. People are ultra bullish. The S&P, the NASDAQ, the Dow, they rally 3, 4, 5%. We get a 15 to 20% swing from Bitcoin. We're looking at well above $23,000, and I would expect us to get a stop right here at 23,200, which would be close to the top of this cloud. And so it remains to be seen. Now, what would we see? And I'm going to take this off. What would we see if we saw a surprise to the downside, right? And so immediately, I'm taking a look at the volume here, right? 21,000 flat seems to be a good number here, right? And I'm going to draw a horizontal line, and I'm just using the volume here, right? 21,000 flat. If we could take a look here, what price did. So we got rejected on 3 wicks here, right? This is back in January 13th through about the 15th, right? Rejected, came back down, broke above, built support on top of this $21,000 level, consolidated a little bit, broke below, tested, got rejected, and finally broke above, which is where we saw that rally up to about $24,000. And that is a level where we see tons of volume coming in, and you can expect buyers to step in and buy Bitcoin. And so right off the top, I would expect, if we do see surprise to the downside, 21,000 flat is a good level for Bitcoin. If I was a swing trader, and we'll ask Magic this, he does this stuff professionally for a living, and so if I can be half the analyst Magic is, I'd be extremely happy. But $21,000 is a level I'd be looking at. So if you're a leverage trader, or you're a swing trader, or you want to scalp profits, that is where I would, and of course, not financial advice. But if I were to put a limit order in, I would put it just a little bit above it. I'd probably put it right around 21,150, right? At least we might get a wick down there. But we might pick up some buy orders on our way down. There's tons of volume there as well. I move that out of the way. There's volume here. And then if for some reason we break 21, I do not expect us to go under 20,500, guys. This is a pretty big level. Tons of volume there. If you take a look, we consolidated on this range. We had this uptrending channel here. We broke down from 21.7 to about 20,007, so $1,000, and we bounced right back up, almost retested it, and saw that massive rally. Let's swap over to Ethereum. Okay, so ETH, same thing. First thing I do is I throw on my my Ichimoku cloud. All right, so ETH. Same thing, right? Below the cloud, lagging indicator is down. Baseline is above conversion line. So all negative things, RSI is right around 38. We see a surprise to the upside. There's a little more room to run on ETH. So I would expect ETH to meet some resistance right around this $1,561. If we break above it, expect it to come up to the 1636 level, which is where we see all this volume, and retrace back to this cloud around 1595. Okay, let's take a look at what ETH did back in for the 1 hour. Let's go back to January 12th. Take a look at what ETH did back in the last CPI. So we're going to go to January 12th. Here we go, January 12th, and I'm assuming it's this big green candle. Yes, it was. So we saw just in the 1 hour, we saw a 3% move for Ethereum, and then we kind of retraced, consolidated, and went back up. If I swap over to daily on ETH and move forward, I call this the Loch Ness Monster, right? You have this thing in a little head here, and then it comes there. All right. So if I just zoom out, right, if I draw a trend line from here, bam. So we could see consolidation right around this area, which would be in line with where we're seeing the volume here, right? Right around this $1,400 level here. So touched on top of this once, almost twice. And here, I'll just and corresponds with the volume as well. And so, do I see it going down to $1,200? No, unless we come in at like 6.5, 6.6. But still something to keep an eye on. You never know, right? Especially for me personally, there's no point in looking at what are the candles looking like? How are the wicks, right? We know people are anticipating, we know people are waiting, and we just don't know what the numbers are going to be. And so if you try to time the top and try to time the bottom, or you try to time exact entry points, you're not really going to make it. But we can get an idea and take a look at scenarios. Well, if the numbers come in hotter than expected, so instead of 6.2 comes in at 6.5, 6.6, where can we drop down to? And I'll throw this on again. If we break below this cloud, we can possibly find some support towards the bottom of this cloud, but I wouldn't expect that to happen. I'd expect it to go down to 1326. And again, if we move to the upside, expect something like $1,700, $1,650, $1,680. That's on the ultra bullish side. Yeah. All right. I'm done with charts. I want to take a look at let's take a look at the cat. What's the cat thing? All right. Man, I am so happy to have Robin on the show because I am not a rambler. I don't like to ramble. All right. Gonna read some stuff in the chat here. H bar is pumping. H bar's been pumping. H bar's been up. I know they brought I believe Dell just joins their council. So that was pretty bullish news for H bar. Jimmy says stablecoins need some type of regulation. Period. I agree. I agree that stablecoins need some sort of regulation, but it's not, oh, you're a security, come in. No, it's like, all right, we need proof that you have backed 1-to-1. And here's what I don't understand with the US, right? The US would just be friendly to these stablecoin issuers and say, maybe put in, say, hey, at least 70% of what's backing has to be US Treasury security. It's a win-win. It's an absolute win-win. It's a win-win for the Treasury. It's a win-win for the government, and it's a win-win for the stablecoin issue, right? You have. You check your mic. Yeah, I'm gonna work on that when I'm done here, guys. Damn it. Here, you know what? If it's that bad, let me. So, is it low or is this sound muffled? Let me know. Let me know. I'm gonna try to. All right. That hopefully will be a little better. Sauce Boss, David, you're the freaking man. Love you, bro. Love you, Sauce Boss. I know the audio is not the best, but we'll get it fixed. Now I forget what the hell I was talking about. Oh, stablecoin. And so you have the Janet Yellen, the Treasury Secretary, come out and say, we're worried about liquidity in the securities market, the Treasury securities. And you got the Fed come out and say, don't worry, we'll give you liquidity. And here you have a chance, right? An opportunity to bring some liquidity into it if you just provide some guidance for these stablecoin issuers. So it's very annoying. How will Sand react with CPI numbers on top of the release? I don't think Sand's any different than any other alts. I think everything's going to rally hand in hand. I don't think we're going to see, Bitcoin's up 5% and Sandbox is up 50%, unless something breaks, unless news comes out, whatever the case may be, then maybe. But I don't expect it. I don't expect it to rally much differently than what the rest of the market is going to rally. Jimmy said, and exchanges can't hold each of the other stables either. That kind of makes sense. Guys, if you have any questions or comments or topics that you'd like me to talk about, please help me out. Throw it in the chat. Otherwise, I will sign off because I have nothing else to go over. Also, if you're new here, please say hello. I'd love to welcome you personally to Sin City Crypto. Also, guys, while I'm waiting, make sure to go check out the new channel, Sin City Studios. So we have an LLC. It's called Sin City Studios. And we always knew we wanted to branch out because we're building, we built out a, close to a $250,000 studio. So, we're going to use it to the fullest of its abilities. And so one thing we decided is, doing what we do now, providing commentary, going over the news, but more in a broad sense, not just crypto focused, but, some of the hottest new things coming out, whether it's tech, whether it's, we're going to stay away from politics because, you bring politics into it, people get crazy. We're going to keep politics out of it. We're going to keep stuff that'll get us canceled out of it. But we're going to talk about some of the most trending things. And the name of the channel is Bold Broadcasting. We haven't uploaded our first video yet, but we're going to, I believe tomorrow is going to be our first video. But the link to that YouTube channel is in the description of this video. Guys, if you are interested and want to watch David and Robin outside of just crypto, go subscribe, help us out. What about those high coins? All right, Sauce Boss. At this stage, Sauce Boss said, at this stage in the market, how far down on CoinMarketCap are you willing to go down to find a project? That's a good question. That's actually a really good question. Take a look. Thank you, Sauce Boss. That was a great question. All right, so right now, market bounced back a little bit, and let me share. All right, how far down am I willing to go? And so obviously, I am comfortable going up to still comfortable. I would not invest in any guys. Please do not invest in any exchange token. Okay, whether it's KuCoin, Crow, OKB, or Leo token. There's so much regulatory uncertainty right now. It's just not worth it, guys. It's not worth it. Please. There's so many other projects. Let's see. Would I feel comfortable in the 70s? 70s. Rune, I'd feel comfortable. Loopring, Optimism, yes. I would say top 100. If we take a look at numbers 101, see if Arweave is number 104. I'd feel extremely comfortable putting money in Arweave. Helium, I don't know. I don't know about Helium. Fetch, possibly. Harmony One, I don't know, man. Harmony One used to be one of our, I'm gonna say favorite projects, but projects we were taking a look at the least. Gala at 121. So I'd probably say I'd feel comfortable. Once I get outside the top 50, guys, I don't put any substantial money in. I consider those within the top 100. I consider 50 to 100. I consider those my 50-50s, right? Outside the top 100, whatever money I put in, I don't even think about it. I pretend like that money's gone. I pretend like I went to the casino and put however much I put on these coins on a 16-team parlay, and I'm gonna lose. So that's what I'm expecting. So I'd probably say I'd feel comfortable going down to about the 150. Cadina's at 143. I'd feel comfortable putting money in Cadena. Same thing with Flux. Um, so yeah, that was a great question, my friend. Thank you for that question. All right, let's take a peek at what else the chat's saying. All right, what makes an AI token an AI token? What is the function on the blockchain? Well, Drew, we have an AI video coming out this week, so your question will be answered. Jessica said, "All you men, please go buy your wives and girlfriends Tracy walking the dog. You will thank me. It's Valentine's tomorrow." Huh, interesting. I haven't bought my wife anything. Damn, I bought her nothing. I'm probably gonna go after the stream, go to I don't know, Walgreens or something. No, I'm very lucky. My wife is so low maintenance. All she does, she gets her nails done and her hair done. That's pretty much it. Guys, she doesn't really, spend a crap load of money on clothes. So I'm very lucky. Very lucky. Babe, I love you. Casper, don't really have thoughts on Casper. Um, Hex is number. Okay, so here we go. Hourglass Crypto. When does ETH upgrade for withdrawals come out? So that is known, aka the Shanghai upgrade. And the devs are pushing that, and they're expecting March of this year. So March 2023, when all the staked ETH that has been locked on chain, that's when they're going to be released. From my understanding, they're not going to be released all at once. And I haven't done any in-depth research, so I don't know if that's true or not. But from what I'm hearing, not going to be all released at once. And here's the thing, guys. I'm actually, a lot of people are saying, hey, um, people are just going to dump. They're going to dump. I actually, yeah, of course, people are going to sell, right? If you put money in when ETH was at $1,000 or $950, $1,100, and now it's at 1,700, yeah, people are probably going to cash out. But I think it's going to drive more people to stake on chain, right? Especially larger institutions, right? If they decide to get into Ethereum staking and validating. Because now you can dump $5-6 million of ETH and stake it on chain, and you can pull it out whenever you want. You don't have to worry about keeping it locked for a certain amount of time. So I think the opposite. I think more people are going to secure the ETH network and stake their Ether tokens versus when they have to stake it and then, hey, who knows when it's going to be unlocked. So I'm actually on the side that I think staking will go up. Of course, there will be some sell pressure in the beginning, but yeah. Dave, what do you think about the DESI sector that may be coming up? DESI sector. I don't know what a DESI sector is. R252 said ETH never releases anything on time. My guess is May at the earliest. Yeah, you're right. But here's the thing: they never do anything on time. But for them to first say, yeah, Shanghai's probably coming the second half of 2023, to moving that up now, and looks like the devs are kind of focused on that. I don't know, man. Are they facing some pressure from people like Coinbase or these companies that are staking in large pools that are worried about the SEC coming after them, especially with what we heard with Kraken? Now, that it wasn't just a 1 week thing where the SEC said, all right, Kraken. No, this was probably a month's ongoing investigation. So everyone knew there was rumors, right? People talk to each other. Jesse Powell might have said something to Brian Armstrong, and these guys get in contact with these ETH devs like, hey, we need to do this faster because if the SEC comes after us, like, we're gonna have to do something. So that might be the reason why. But would I be surprised if they push it back? No, not at all. What else? Billy drank his warm milk. What's up, man? Warm milk, huh? That's still Hourglass said, I've heard expectation that when ETH upgrade comes out, 85% ETH will be staked. That's insane numbers. I'm telling you, man, people are bullish on ETH, especially after move the proof of stake. You might not like it. I think it became more centralized, but like mainstream likes it. The whole narrative of, oh, it's good for the environment now. We're not doing proof of work. We're not, emitting carbon. People like that. Institutions like that, right? It's not about, we only have a certain amount of money. These large asset managers who have billions and trillions of dollars that are going to take 1% of that, which is $100 billion, and put it into an ecosystem. And so, if we want mainstream adoption, that's what we're going to have to deal with. Crypto Web, greetings from Belgium. What's up, my dude? Decentralized science. haven't done any research on decentralized science destroyer. So I will get back to you on that. Jessica says she bought ETH at 700. That's awesome. Amazing. Web3 said SEC equals Coinbase equals BlackRock equals Circle equals USDC equals CBDC. I can, I'm not going to push back on that at all. I think with China's CBDC, India's rolling out a CBDC, Nigeria's rolling out a CBDC, England, I don't think we're going to see the U.S. come in and try to make their own. I think what Web3 me is saying could be right. Might pick up on USDC and say, hey, this is what we're going to use. They're going to bring it in. They're going to regulate it. Might give them a account at the Fed. Who knows? But yeah. All right, guys, I'm going to wrap this thing up. Thank you to all of you who watched today. And Mike, yes, I am still bullish on Filecoin, and you can thank your friend Robin for that. Be bullish. I always liked Filecoin, but for me, it was like, is it going to be Filecoin? Is it going to be Arweave? But there's nothing wrong. I think both projects are solid. There's nothing wrong with hedging and having a little bit in here, a little bit in there. But when you look at Filecoin from where it's at to its all-time highs, if it could just get back there, that's a big move. 40x. That's huge for a top 50 project. The 40x. So, anyways, guys, love you. See you tomorrow. Big day. CPI numbers come out. We got Magic Internet Money. We got Crypto Blood joining us. You do not want to miss the show. Go support and subscribe to Bold Broadcasting. The link is in the description of this video. Love you guys, and I promise the mic will be fixed for the next stream. See you guys tomorrow. Peace.